Meantime, the vice president's tax proposals might have a dramatic impact on investors. Robert Frank has some numbers for us this morning. Hey, Robert.
Good morning, Carl. Well, Vice President Harris proposing to double the tax on capital gains and taxing unrealized gains for the very wealthy. Her campaign endorsing a plan that calls for increasing the top tax rate on long-term cap gains from 20 to 44.6%. That would be the highest rate ever in U.S. history. So if you're in New York, you sold some stock, you're above that income level, the combined city, state, and federal rate would be 55.5%. If you're in California, would be just under 58%. She's also calling for a tax on unrealized gains for those with a net worth of more than $100 million. So that would call for a minimum tax of 25% on unrealized gains. So even if you didn't sell something and it gained in value during that year. So they would be taxed on any annual increase in the asset or value, again, even if you didn't sell. Non-tradable assets, like a private company, very illiquid, they would be taxed at the last valuation event plus some annual increase. Illiquid taxpayers, those would be a separate group defined as those with less than 20% of their wealth in tradable assets. They could defer payments until their death, but with any interest charged attached to that. Now, some estimates show the tax would raise about $500 billion in revenue over 10 years. But, guys, when you look at the tradable versus illiquid rules on this, there would be a lot of unintended consequences. Like, for instance, David, this would be interesting on the deal side. You'd get a ton of take privates because if you're a private company or a liquid asset, you would defer those taxes over the life of the asset, whereas if you have tradable stock, that could be marked to market every year and you'd pay that tax. So there are lots of questions, lots of complicated details that would still need to be worked out. But at least we have a revenue raise now from the Harris campaign.